It is my pleasure today to introduce Mary Childs, author of The Bond King, How One Man Made a Market, Built an Empire, and Lost It All. It's actually very timely of all the disruption in world markets, as we're saying. If you're looking for someone to help kind of point a finger at, he may be one of the people you want to take a look at, although not directly maybe this time. But it is about Bill Gross, who's arguably one of the most important men in American finance that you probably have never heard of. And over the last half century, he's really transformed Wall Street and the world beyond in his activities. He, like most brilliant ideas, Bill saw something different in the boring and ordinary and turned the staid world of fixed income investing into the rough and tumble world of bond trading. He rose to control or influence trillions of dollars. He also made himself one of the wealthiest men in the world along the way, coincidentally. And he's also been in charge of moving markets both in the US and internationally, based on whatever he utters, people act on. And everyone then who grew up around him when he started his firm has gone on to become fabulously wealthy by following his lead. Nominally this is a story about finance, but at its heart it's about a man and his drive to win. But like many of these success stories, his own ego and idiosyncrasies led to his downfall, and he was thrown out of the firm and the world that he created just a few short years ago. Going behind the events and into the head of the key players, readers can catch a glimpse of what it means to be a Wall Street master of the universe. Now, banking and finance can be incredibly complex, dry, and even boring, but especially for lay people, and sometimes even for practitioners such as myself. So it takes an especially gifted and knowledgeable writer to take the complex and make it relatable. Mary has spent the past several years now writing for Barron's and the Financial Times. Many may know her as the co-host of NPR's Planet Money. In her work, she brings clarity and insight to things that are purposefully opaque and the reader or listener benefits. Here today to talk about her book, please welcome Mary Childs.
So my name's Darrell Delamaide, and I'm going to be interviewing Mary about her book. I'm glad all of you could make it. It's the last event of the day, and it's a book about bonds, but nonetheless, you're here. So let's just start. We'll get into more detail about the book itself, but the bond market, the stock market, all markets are tanking. So last week, the Financial Times, the British business newspaper, declared or suggested that the bull bond market is over. They quoted Bill Gross as saying it's over. They quoted Scott Minerd, who Bill Gross thinks is his successor as the bond king, that it's over. However, Bill Gross's successors at Pimco said, maybe it's not over. So who is right?
Well, I think all of these statements should come with some caveats, right? Bill Gross has been calling the end of the bull market in bonds for at least the majority of the duration of the bull market in bonds. So some salt there. I do think that there is some validity to it. I mean, you've seen this abrupt turn in interest rates in the market, and this is a response to inflation and to the kind of sense that the Fed has raised rates and there's probably more to come soon. All of those things kind of convene to make it look like this may be the end. Of course, the other asterisk here is that Pimco would also have a vested interest in it not being the end of the bull market in bonds, given that they're still enormously a bond shop. So I think their business sort of depends on it continuing to some degree, and it's just. If you look at the trajectory and the price of money, it's just been coming down and down and down for decades. And there is this, neutral rate, this like natural rate of what we want to charge for exchanging money. And it's hard to say that that's necessarily going to go up. We have a lot of exogenous factors right now and like idiosyncratic things that are happening in the world, like the shortages and supply chain snarls and all that. And if you removed those things, it's just hard to say what we would have right now. You know, would we have this inflation? Would we have these, you know, this kind of labor price difference that we were finally seeing, you know, some strength in labor markets and ability to negotiate higher wages? I just don't know. So I'm sort of still, I mean, I'm a journalist, so like it pays to not make a call. But, and by pays, I mean it doesn't pay either way, just to be clear. But I do think that both parties have a vested interest. I might listen the most to Scott Minerd, given all that, because Bill's out, bonds are over, Pimco's in, bonds are not over, you know.
So we could have it both ways, or either way, but we don't know.
A non-answer, yes.
Yeah. So Bill Gross, he's retired, theoretically, but he's talking a lot, and people are calling him up a lot. And one of the things he told the Financial Times again recently was that he doesn't think the Fed can raise rates much beyond 2.5% to 3% without cracking the economy. Is he right?
You're asking me questions like I'm the multi-million-dollar pay, you know, I don't know, man. I do think there is a bad track record of the Fed raising rates and not tanking the economy, right? Like that's a very delicate balance. And I'm sure he's right that there is a level at which, you know, this fragility becomes just, you know, it snaps. And that's probably true. I wouldn't want to try to pick the actual interest rate level or amount of increase, having no PhD or even a model in front of me. But, you know, that being said, I do want to, you mentioned something about Bill being kind of on tour right now. And I think that's sort of interesting and relevant to the book because I think part of the reason he's on tour is because he wrote a book too. He sort of took the initiative to write his own memoir, sort of in response to my book. I think he told the FT it was in response to my book, so I can say that now. He saw the kind of list of questions that my fact checker sent him last summer, and he was like, no, this isn't what I wanted. And he wrote what he wanted. And then he published it 2 weeks before my book, and has been kind of on the circuit. Now, you'll read in the book, in mine and I think his, that one of his motivating factors is this drive for fame. So to some extent, he kind of never got off the circuit, but I do think he is on a bit of a media tour to promote his book, and happily also mine, sort of by accident.
You anticipated my next question, actually.
Oh, no, sorry.
Because he was quoted in the FT as saying he wanted to get his story out, or his version of the story.
Yes.
Because he wasn't sure what was going to be in a new book that's coming out, and that was your book.
It was mine, yeah, spoiler alert, yeah.
And you have heard from him since it came out.
Yeah, I don't know how much I'm actually able to share about what he told me, because it was not explicitly on the record, so I'm just going to say that on the record he has not sued me, yet. So we're very happy about that. I think he, would quibble with some of the characterizations, like any book that you don't write yourself, anything that you don't write yourself is not going to choose the adjective you want, right? Like, you want me to say that you're this unimpeachable legend and you did everything great. Like, every person wants this. And, as a journalist, that's just not the kind of thing we write. We write about the bad stuff too. So necessarily, he's not going to love every single thing in the book. But I do think that he knows how hard I work to make it fair to him and to everyone else in the book. And I think we would have seen a lot more action from his camp had there been stuff to object to.
So that brings us to one of the other main characters in the book. I don't know if I'm pronouncing the name correctly, and you can correct me. Mohammed El-Arian?
Mohammed El-Arian.
El-Arian, okay. I'm a writer, not a radio host. So, but he apparently only communicated through his lawyers with you. Is that correct? That's correct.
So I actually, Mohammed El-Arian is a Bloomberg opinion columnist, and I was at Bloomberg News for many years while I worked on this book. So, we're in the same building a lot of the time. And sometimes there was a day where I had to write about, my boss assigned me a story where I had to write about Mohammed El-Arian's TV appearance in which he discussed his Bloomberg opinion column. And I was like, I don't understand what my utility is here. This is a bit of an Ouroboros. Anyway, I had known Mohammed El-Arian. I covered Pimco at Bloomberg News as a beat reporter. I did miss his tenure as the CEO, so I didn't cover him as extensively as other people have. But yeah, when I approached him to talk to him about this book and to say, I want to get your perspective, I want to make sure I represent what happened and your emotions and what you think, how you think this all went down, he was like, that's a no. And I mean, he's like the, I don't know, secondary most important character in this book. So that was kind of a blow. But I worked very hard to kind of, I don't know, synthetically replicate his state of mind and his priorities and what he experienced, and which is hard, you know. You always want that firsthand because there's always a nuance you're missing, or like, no, I didn't do this because of that. I did it because you know, and it's a lot of work to try to embody a person's whole life experience and think about what's making them act in the way that they're acting. So anyway, so one day Muhammad Al-Arian's representative emails me and they're like, we want to talk. And this is December 2021. The book is coming out in, at that time, February 2020. And I was like, oh, now? So they had evidently obtained a copy of my manuscript, which I don't know how. And I was sort of sitting there like, wait, who leaked this? And then I was like, wait a minute. A major plot point in my book is that Bill Gross is, I wouldn't say driven insane by trying to hunt down leakers, but like the fact that people were leaking, that was like sort of the beginning of the spiral. And I was like, I know not to do this. I'm gonna close that door. I'm not gonna think about who leaked. I'm not gonna go down that path. But anyway, he had notes. His lawyer sent over, you know, a multi-page, I forget how many pages, letter with notes on the manuscript, things he objected to. And, you know, as a journalist, I would never share a pre-publication copy of anything. But frankly, having gotten these notes was a relief. It was just like, oh my gosh, I worked so hard and you only have these notes? Like, this is great. Like, I did a good job. And then I got to incorporate the things that seemed, you know, necessary and mandatory to incorporate.
So there's a lot of parenthetical remarks to the effect that a lawyer for Dr.
Al-Arian.
Objected to this or that.
Yeah.
So he may have been, however, the only person you didn't talk to, because you said you had hundreds of interviews,
Yeah.
thousands of documents,
Yeah.
years in the writing.
Yes.
How did you do that? And I guess the bigger question is, why did you do that?
I ask myself both of these all of the time. I have no idea. I literally don't know. I mean, I took a year out of the kind of day job carousel to do a lot of this, and that was the bulk of the like interviewing and digging people up on LinkedIn and bothering them and you know, trying to set up as many coffees and meetings as I could. But it was, I don't know, I mean, it just, sometimes it's mind-boggling how much work goes into one of these things. You don't really notice when you're reading it. If I've done a good job, you won't notice. Because you're like, oh, this is like a fun, rollicking narrative, and you don't see like the seams and the like vast trove of documents behind every word. But, you know, the work is the work. It just takes what it takes. And I thought that this would take me 1 year when I started. It took 7. It took 7 years. And like, it's worth it, I think, because I learned so much and then I had to like put it all away. Like, there's so much that's not represented in the actual words of this book that, like, if you want to talk to me about Pimco's history in the 80s, like, I'm here. It's not in the book, but I can talk to you about it. I think it's maybe to your benefit that it's not in there because it apparently was boring. But I think, like, you know, this was a bit of a passion project. I just love the bond market, and I think that people should understand it. And it's a good story.
It is a good story.
Thank you.
Now, since you mentioned the bond market, can ordinary people invest in bonds? Should they?
Yes. Yes, you can. Generally, the easiest way for retail, you and me, mom and pop investors, is to buy like an existing, like a mutual fund or an ETF. The difference between an ETF, mutual fund, and buying an actual bond is that your bond fund is more likely to lose money than just the bond, unless you buy a super risky one, yada yada. But like, if you're buying a muni bond or a corporate bond of a company that's like normal and, you know, high grade or has a robust business model, like, you're generally speaking going to get your money back, and the only cost is basically FOMO, or is the, you know, paper loss that doesn't actually really affect you as a normal person. You're just getting that income and not worrying about the foregone income had you bought something higher yielding. So, I mean, there's a world in which, like, yeah, you go out and buy. I think they do slice up bonds now for retail investors. I have not personally investigated, so I'm actually quite bad on the personal finance front. Have not done much of that. We really kind of famously avoid it or ignore it at Planet Money. Maybe we shouldn't, but yeah, I mean, you you're gonna, I mean, inflation's high, so that's like not a great argument for fixed income. If you're getting a fixed income and tomorrow that's, the value of that income is less, that's not ideal. That's not what you want. But it's income, so better than zero.
So, and a lot of people do want a mix in their portfolios, so they buy
Yeah.
bonds.
Diversification.
Now, you worked for Bloomberg.
I
and
did.
You said you gave Bloomberg a lot of credit for providing good training and so forth.
I did.
totally agree. I worked for Bloomberg too. And I worked under Matt Winkler, who founded
Ditto.
the Bloomberg News. So you did too. So he was a big believer, as a former bond reporter for the Wall Street Journal, he was a
Yes.
big believer that the bond market could foretell events. Like elections.
Yeah.
It doesn't have to be financial events or whatever. So I guess the question is, what is the bond market foretelling right now?
Not great stuff. I think it's foretelling more inflation, higher rates. It's not an overly pretty picture right now. There is some, business as usual, like in the high yield bond market. Similar to individuals, it's been a bit of a time for a lot of, kind of a slice of the population. It's been a time of saving money and, kind of cleaning up your balance sheet and being able to regain your footing. And a lot of companies, like in high yield, have done this and have taken advantage of the historically low yields that we just had and, are in pretty good shape. The loan market is a little different. So I don't know. I mean, I think that it is sort of a troubling outlook right now in a time of sort of historic volatility and historic losses, especially in the bond market, which is like, I don't know, tired of unprecedented times too.
So as you say, it's not foretelling anything good.
It's not good. Yeah.
Okay.
Sorry.
Now, we talked about this being a good story, and just let me say, parenthetically, I think it's remarkable that you were able to produce a book like this that's so lucid, jargon-free, and it really does make things a lot clearer, I think, to
Thank
people
you.
who don't understand it. You tell the story, which was a good story, in a non-chronological fashion. You start here, you jump back, you go forward. What is behind this method?
Part of it is that I tried the chronological way first and it was boring. And then the other part is that, there's this process of discovery, and to understand what's happening today, you necessarily must go back. There's sort of a joke at Planet Money that we, in every single show, will be like, to understand X, you have to go back. And it's like the guy from Lost, But we do this like every episode. Now that I've told you, you'll hear it. I'm so sorry. But the basic thing is that, and I learned this sort of empirically while reporting this book, is that everything that happens today has some precedent, I know I just said unprecedented, that was wrong. There's some analogy or kind of sketched out version over time, over history, that can be pulled into the present day and give it that fulsome context and give it, more meaning and more impact and tell you the real stakes of stuff that's happening. So, one example is when Pimco is like really pushing the boundaries on how to trade this new ETF. I tried to kind of wrap in other times when they've done similar things and pushed the boundaries, because this is a recurring theme that you see over and over. But if I'm just like plodding through history and I'm like listing things that happened, you're going to be very bored. You're just going to tune right out. You're like, this is a list. So the narrative structure is like, we're in this car together, and like we're going down a road together, and like the propelling thing, that the road that we're on, I'm conflating engine and road here, and I apologize, the metaphor's not working, is the actual narrative of, starting in 2006, Pimco calls the financial crisis, in advance. That's where we start, and then we go towards 2014, but I need you to understand things along the way. So, we're kind of taking little detours to still get to our destination, but you just need to do that kind of winding road to understand where you are and where you're going.
I think the thing is, you're telling a story.
Yeah,
And
no,
so
that,
you tell it the way people can relate to it.
Yes.
I think that works. Bill Gross, you make or you note along the way that Bill Gross had his quirks, like he didn't like to shake hands, he averted his eyes and so forth. And he disclosed eventually that he has Asperger's syndrome.
Yes.
What role do you think that played in the kind of person he was and the kind of trader he was?
I think it was a pretty huge role. You know, he thinks of it now as a superpower, I think. He's talked about his diagnosis as being on the spectrum, as being, as kind of enabling him to have this superhuman ability to focus and superhuman ability to just like not break. Like he doesn't need to stop what he's doing ever. In fact, he prefers not to. And he gets really annoyed if you do interrupt him. So, you know, I think it is true probably, but I think the flip side of that, and he said this too, is also true that it made him a bit different in the office. Like you say, he avoided eye contact. He didn't want to make eye contact. And that's just like a famous, you know, manifestation of Asperger's syndrome. So I think, you know, it's difficult because he was in such a position of power and influence. And he was the kind of face of the firm, the leader of the firm. And yet he was shy and introverted and didn't want to make eye contact. So that comes across if you're like an underling at Pimco and you're like, hey Bill, you know, like trying to do your like in-house networking, like he won't even look at you. And I think that transmits as rude. That comes across, if you don't know that this person's neurodivergent, you're not going to necessarily know that that's kind of not on the menu. Like he's just not going to make eye contact with you. And I think you know, we're getting better as a society at recognizing these things. Certainly, this was not, you know, recognized. He didn't get diagnosed until after he retired from or left Pimco, and he didn't. And you know, I think our society didn't really understand and like interact with that very much previously. So, and I think the people that he came up with kind of got it intuitively too. And when those people left, there was that kind of a vacuum of understanding, and that disparity, that power gap that doesn't really help with the translation. So I think it was a hugely important part. Now, I will say, I think in finance and I think in tech, people are always like, oh my God, I'm totally autistic. And you're like, that's not how we talk. And they're like, that's why I'm a jerk. And you're like, is that how? So I just want to say those are two things that are not related. Like, you can be a jerk without a diagnosis. You can have a diagnosis without being a jerk. So, like, don't do that.
Well, that is actually a pretty good segue to my next
Oh,
question.
perfect.
Because I think it was Jim Grant in his Wall Street Journal interview who pointed out that, well, Bill Gross didn't really lose it all because he still has billions and billions of dollars. But I guess the question is, in this age of inequality, are there any billionaires who are nice guys? Are there any billionaires you like?
That I like personally? Mm-hmm. It's funny you should ask. I have a list on my phone, billionaires best to worst. And I think number one is Oprah, right? And I don't want to say who the worst is because then I got to explain myself and then I'll get sued. So we're going to skip that. You can ask me privately. I don't know. I mean, the underlying thing is if you're a billionaire, there's a bit of a failing, I think, where like if I were a billionaire, I would have housed everyone I've ever met. I would have bought them a house so fast, and I would have like bought every single house on this. Like, there's this one road in Richmond that has like really old, beautiful houses that are all kind of dilapidated, and I'm like, I'm gonna fix you up. I'm gonna fix you up. Like, I don't have the money to do that, but if I did, they would be beautiful and, you know, restored to their former glory. But it's hard to, you know, there's a strong argument that there's no such thing as a good billionaire. But I think the fundamental thing that you're pointing to is kind of a fundamental thing that I found in my book, which is that like money never makes you happy. If you don't already have the ability to, you know, be happy in yourself, you're just not gonna, money's not gonna get that for you. It's not gonna provide any kind of reassurance or sense of security or calm if you don't already have the ability to feel that. So I have met some lovely billionaires. You know, Howard Marks is really nice. Just a nice person. So that's fun. That's my pick.
So you don't have to be evil to be a billionaire.
You don't have to be evil, but I would suggest you've at least fallen prey to a lack of creativity of what to do with your money. And I have ideas for you.
So, in fact, speaking of quirkiness and petty qualities, Bill Gross now, in retirement, is probably most famous for his big feud with his neighbor.
Yes.
Who is also very rich in Laguna
Yes.
Beach. Yes. And they're having court battles. I mean, he, along with Rand Paul, is probably the most famous feuding neighbor in the country.
Oh, no.
So what does that tell us in retrospect about Bill Gross, the trader, the bond king?
It's instructive on a few fronts. So the story in reference here is that Bill Gross and his next door neighbor in Laguna, and his wife installed a Dale Chihuly sculpture, a glass sculpture, and then like it has like uplighting. I personally don't like uplighting. Maybe you do. It's a matter of taste. And the neighbor's like view of the beach, of the water, like the Chihuly's like right here when they're in their bedroom. It's like right here, and like that's fine. But then there's uplighting, and then they put like a net over it because it like got damaged in I don't know weather because they live on a cliff. And so the neighbor's like, do you mind? Can you not? And Bill and Amy, of course, are like, yeah, we mind. We're going to keep it. And then the neighbors contacted the city and said, you don't have the right permits. And then Bill and Amy start playing music at all hours on repeat. And this includes Inda Club, excellent song, Green Acres, the theme song, and Gilligan's Island, the theme song, on repeat. And the neighbors are like, again, do you mind? Like, can you stop doing this? And again, they're like, no. And this goes to court, as you say. And eventually, Bill and Amy get sentenced to jail. And it's suspended sentence. They only have to do 3 days of community service. But the things that I've learned from this, one is that Bill needs a benchmark. He needs somebody to compete against, or he's unmoored entirely. Like, he always needs something to orient himself around and to kind of give him a universe to compete against. And in this, it's his neighbor. In the book arena, it's me. For most of his life, it was, the Barclays AG, the index of, the bond universe. And he's really good at beating a benchmark. He's really good at setting his mind to something and bounding that universe and then winning. It also says to me that he just can't exit gracefully. He just can't find a way to get out of the mental trap of these disputes where he's engaged with his neighbor and they're all so rich they could just buy a new house. Just buy a new house. Sell, you're not forever, it doesn't, and they're only there 25 days a year, max. So all of this over 25 voluntary days. I don't know. I think that speaks to, he just gets fixated.
So through his career, Bill Gross had a lot of conflict, let's say. And he, at various points thought it was necessary, as you mentioned in your book, to control the narrative. And, as a longtime journalist myself, I'm a little bit wondering where is objectivity, where is the truth? If you have people vying to control the narrative, how do you get through to what is really going on?
Such a good question. And this goes, I think, to the heart of, journalism and the existence of absolute truth or not. I don't know. I mean, experience is subjective, so to some extent there's no such thing, I would say. I think Janet Malcolm agrees. Agreed, rest in peace. I think there's some, one thing I found comfort in was getting to know my sources really well and understanding their relationship to the truth. And also, if you talk to one person for years, you get to know them, you know how they think and what they care about and what affects their ability to tell you the truth. There's also reliability as a witness, you can kind of, if they tell you the same story 5 times and it matches, it's pretty good. If they don't ever deviate, that's pretty good. But there's also, again, a fundamental thing in journalism is you just kind of line up all of the accounts that you have and you see where they overlap. And you check it against relevant documents. And that's one thing I love the most about financial journalism as opposed to political journalism. I can look at my Bloomberg terminal and be like, I don't know, it says 2.5, not whatever you just said. So there's, there are ways to check people and kind of get your bearings that way. It's a lot of triangulation and yeah, mostly just knowing and gaining an instinct for when they tell you something, what they actually mean. And you have to think about why they're telling you the things they're telling you, their motivations, their ability to understand their own role in what happened, and their ability, one thing I underappreciated when I started this was how economic everything was that that sounds ridiculous, but the profit sharing, like the shadow equity that people hold in the company was so affected by Muhammad El-Arian and Bill Gross's departures. And everyone was like really mad and really emotional because it had affected their personal wealth in a drastic and dramatic way. And I kind of didn't get that. And I think if I'd understood that more sooner, then I would have been able to be like, okay, like navigate that better, just because I would have understood that they were like freaked out because their personal net worth had taken such a hit. They weren't mad at me, they were mad at their wallet. So they were also mad at me probably, but yeah, it's a lot of balance and triangulation.
Yeah, there's a lot of conflict, a lot of drama in the story, in your book. I'm thinking maybe there's a mini-series in there somewhere.
Okay, I don't disagree.
Is there a mini-series coming? We have mini-series of all the Silicon Valley entrepreneurs. This seems pretty ripe for it.
Thank you. I completely agree. Everyone call your local Netflix representative, your HBOs and your Apples. No, I agree, and I am talking to people, but it's one of those things where I suspect it'll be slow. I think nonfiction is a bit slow because it can be, there's like a lag time, and you got to get the life rights or not, and you got to lawyers and.
Have you thought about casting?
Have I thought about casting? I've thought about casting. My lead for a long time was Steve Buscemi.
Who?
Steve Buscemi.
Okay.
What do you think?
I'm thinking Willem Dafoe.
That was my other pick. That was my other pick. Or Michael Shannon. I feel like I know, right? Yeah. Ed Harris.
Yeah.
I don't know.
Okay. Well, coming soon to Netflix. So we can open it up to questions from the audience now. If anybody has questions they'd like to ask about the book or about the bond market or about casting at Netflix, anything.
Muhammad El-Arian, Tony Shalhoub. Right? Okay.
Tony Shalhoub.
Right? That's really good.
So, high finance and Wall Street finance is filled with huge egos, but usually underneath those egos, it's something underneath. It's not all of what it seems. So I guess my question is, you got to really know a lot of these folks. Are they really that good? Or are they just kind of at the right place at the right time and really good at promoting themselves and holding on?
Yeah. Some of them are really good, I think. There's a manager in the book who I just did a Planet Money show on literally yesterday named Ben Trotsky. And he told me all this, about his strategies and his desire to be number one in his universe over 10 years, and the way he approached it. And I think that it was like, I was like a little nervous fact-checking the story. I'm like, what if he wasn't number one over 10 years? Because I kind of like, it's not in the book, so I didn't ever fact-check him on that until literally this week. And I was like, oh, good, he was. Because I believed him more than I believed a lot of the people that say the same things that he's, I did the research, I really tried. I think some people are better at it than others, and I'm really, if you listen to yesterday's Planet Money, I apologize, I'm repeating so much of it, but it's what I've been thinking about. But a lot of them are kind of just there. Like, one of the, some Pimco people have told me that I was hard on Doug Hodge in this book, but I want to tell you that I asked Doug Hodge questions about the bond market, and he would not, I don't know what happened, but he told me like a script in response of like, well, bond market liquidity. I'm like, babe, I didn't ask him about bond market liquidity. Like, I don't know it. So no shade to Doug. Maybe he didn't hear me properly, but like, there's something frustrating about that. When like I'm engaging in good faith as a bond market reporter, I think we all are supposed to be like focused and in good faith talking about what we're talking about. And so it's frustrating when that's not, when not everybody's on the same page. And I think that it takes a long time because of the jargon to figure out who's a joker and who's not. And I think like that's on purpose, right? Like the jargon helps to mask kind of ignorance or kind of a haphazard, a lot of luck, and that maybe they ended up there not because they were particularly talented, but because they just are there. And I couldn't tell you what proportion that is, but yeah, it's weird that there are people, it's supposed to be such a meritocracy, and I would put forward that it's not.
So Doug Hodge may be better known to most of you as the guy who went to prison for 9 months for
Justice Department's Varsity Blues.
The college.
Bribery.
I can't even remember the name of the college scandal.
Yeah. Richard Singer. Yeah.
So Another question? Yeah, please.
When Pimco lost a lot of investors once Gross left, where did they all go? And because of the growth in ETFs and index funds, does that make managed funds, especially bond funds, kind of not unnecessary?
Good question. So the question is, a lot of money left Pimco when Bill Gross left. Where did it go? And then the second part of the question was, with the rise of index and ETF funds, are managers basically obsolete? Yes? Okay. So the first one, a lot of it went to competitors, to TCW, to DoubleLine, to Guggenheim. And I think to your second part of your question, a lot of it did go to ETFs and index funds because people were like, well, I wanted the bond market. I am a little disillusioned from this whole key man thing. This abrupt departure. Clearly, everyone is more human than we realized, and reverted to kind of a robo-advisor or a passive index fund. And I think, at this exact moment, like, is there a big difference between active and passive? Like, for the tenure of the rising market, you certainly were overpaying in a lot of cases for active management. And yes, that means that, like, we didn't really need a human being being paid too much to make choices that oftentimes didn't even help them outperform. Maybe they underperformed their benchmark and you would have been better off in a lower fee index fund. Now, the argument is, with the change in the interest rate paradigm and the change in the whole kind of market backdrop, if we have falling markets, maybe you want a person at the helm.Maybe you want someone to avoid the things that are going down more and find things that go down less. That's been the argument. I don't know. I mean, probably. What do you think?
Well, I think your book provides a lot of evidence that management can produce extra profit.
Yeah, that's true.
Because a lot of the, not tricks, but a lot of the innovations, a lot of the trading that Bill Gross was able to do eked out some extra profit for the holders of his mutual fund. So,
yeah.
It's, I don't think it's a debate we'll settle today.
No,
but,
no. But thank you for the reminder.
Another big personality in the bond market is Jeff Gundlach. Did you compare and contrast or comment? Did these guys ever meet?
Oh, did they? It's in the book. I forgot what page, but yes, there is a summit, basically, a meeting of the minds between the two. And Jeffrey Gundlach is the manager of DoubleLine Capital and had sort of a fractious exit from his own, previous employer of TCW. And it was, I would say, even more dramatic. He was less of a, central character of the bond market at the time. So I think that I think it was more dramatic. You can read all about it in the book, but they're very similar in a lot of ways, I think, personality-wise, and like bombastic statements, and they love being in the press. And I think he's like touchier. He's more kind of like he collects art, and he has this like beautiful home full of just like dramatic art and jewels. Like, he collects jewels just in case, because gold isn't going to do well in the apocalypse because you can't carry it around and shave pieces off to pay for things. I swear to you, this is a real thing that he said in a conference. I would have to go check my notes, but yeah, they're really similar. But Jeffrey's unique in his way. So there's a lot in the book, but everyone's like, "Oh, you're going to write a book about Jeffrey Gundlach now?" No, I shan't be doing that. This was enough.
What differences do you find in doing long-form audio versus recorded?
Oh wow, so different. First of all, audio is a much more intimate experience, where if you're typing a story, especially as a beat reporter writing 300-word stories like the credit default swap index, rose or fell in a given day, not a very emotional story, not a lot of feedback on those stories, not a lot of fun. I liked it because I learned a lot, but in audio journalism, you're in someone's ear. You hear my voice, and I actually don't know if you know this, but you can hear if I'm hungry or not. You can hear if I'm tired, and you can definitely hear if I have a cold, and you can hear emotion. You just can hear so much more information is transmitted, and I didn't appreciate that really before I started. And we had a really good producer who would be like, I just, in that tracking, I think you used the wrong and. You said and I think it should be and I'm like, wait, what? But she was right. And now I can hear, I'm like, oh, that was the wrong then. You said than, not that. You know, like there's tiny, not even just like in terms of words that sound a little bit, but just like the meaning that you transmit and the way we talk all the time about it at Planet Money, and it's like, it's so important. So that's like fun and creative work that I did not get to do writing about credit default swap indices at Bloomberg News. I say y'all. I never really had one, but I do say y'all more now, I think. Yes.
I would go back to what you said earlier about navigating between various sources and deciphering the truth, because the more people you talk to, the closer you get to the truth.
Yes.
And, you know, a book is, of course, the ultimate form of long-form journalism. I think one of the few places our careers didn't overlap was Institutional Investor, where I was writing 5,000, 7,000 word stories,
Awesome.
talking to 50 sources, and it gives you, it just fills in the picture a lot more.
Yes.
So
You have time.
Do you miss writing journalism?
Right now, no. I kind of got tired of writing. Maybe the book had something to do with it. I don't know. It could be. And the performance of Planet Money is so much fun, and it's so different. So it's been a wonderful thing to get to build new skills. And like, you know, it's crazy that they let me do that because I had no audio experience before I joined Planet Money. And I was just like, hi, can I be on the radio with you? And they're like, yes, come on, which is incredible to be able to do that kind of late career pivot, or mid-career, hopefully. Yeah, I miss, the thing that's good about audio and print is, and all journalism and all writing, is there's always an exact right word. And I've gotten kind of fixated on like finding that exact right word and being kind of mathematical and like insistent on it. And they're just like a lot of words you get to pick. It's very fun. So that's my, I don't know, that's where they overlap for me. And I think that's like, if you have time to do that work and talk to the 50 sources and time to pick the exact right word that reflects what they told you, all of them. Yeah.
It's different when you're doing 9 stories a year.
Yes.
So, and is there anybody else who has some questions now?
So I do have a question. First of all, I'm an avid listener, as I explained to Mary, at Planet Money. If you don't already listen, it's a wonderful podcast.
Thank you.
And really, the sort of that other question, it's like you almost, I know you people. I do. It's like,
Yeah.
and then actually, it was this last January, I guess, you read The Great Gatsby.
Yes.
Were you that in that?
Yeah. I got to do the party scene. I was the drunk people.
Because it came out of
Copyright, yeah,
right?
yeah.
So January 1st, for like 5 shows, they read The Great Gatsby.
I was just thinking about that. That was great.
Amazing.
Thank you. It was like a bit. Like, no one thought we were actually going to do it. We were like, okay, so we're going to read the whole book. And then the people were like, oh my God, this podcast is 4 hours and 51 minutes long.
It was amazing. To hear it read.
It was really
I mean, obviously, there's audiobooks and everything.
Yeah.
All these things. So, would Muhammad al-Arian consider COVID a black swan?
Oh, yeah, I think so.
I mean, isn't that sort of the
Definitionally a black swan. Yeah. Yeah, I think so.
Yeah, when you talk about interest rates and all this other stuff.
Yeah.
Most of this wouldn't have happened.
I think that's right. And this is probably embarrassing, but I used to think, or I realized in recent years and months that I thought that inflation was just when money went up for no reason, or when prices went up for, like, if there's a reason, it doesn't count. I think I thought that. And now I'm like, oh, I guess there's not a better word. There's not a more specific word for when prices go up for no reason. Like, I was like, oh, the supply chain stuff, that doesn't count. Anyway, maybe that's an episode, but maybe that's embarrassing. I can't decide.
So, more questions.
How did you fall into financial journalism?
Partly that the business model is more robust than the rest of journalism. Partly that I like the innovation of it. You know, they're always inventing something. And partly that, you know, I mentioned this before, that when, you know, someone's telling me something, to some extent I can go check it on the terminal or Yahoo Finance or whatever. And I find that very reassuring, like in political journalism, which I tried for, I think, about 3 whole months. You know, a scoop is like someone being like, I think something. And you're like, oh, scoop, a person thinks a thing. And then, like, what if they change their mind or say they didn't say that? Like, I just never understood that. And it's a lot, I think, more access-y, and I'm pretty terrible about access. I'm not, like, deferential enough. So political journalism was not for me, and I don't know. I also, this is very Planet Money of me, but I think the economy is, the invisible force that controls the world, blah, blah, blah. So,
2 minutes. Okay. They're playing, the orchestra's starting to play. So is there a final question from someone?
yeah.
Any comments on international bonds?
Oh gosh. I feel like the like dollar bond, dollar denominated EM bonds have been not rewarded, have been just as punished, and that's a bummer. I don't have anything enlightening there, but I do think it's like we're still ironing out the way that kind of global flows operate and work, and how those things are rewarded or punished for for their different paradigms and different kind of structures. I don't know. I think it's imperfect.
Any Brexit, Euro?
Oh God. I was at the FT during Brexit and I was like, no, I don't want to write about it. That's what I have to say about that.
Okay. Well, I think that unless there's something you want to say to resume.
No, I mean, thank you all for being here. It's been a great honor and I appreciate your attention so much.